Good morning, everyone. Today is Friday, January 28th. I'm Marv Eisen of Timeless Dollar, and I have a few words to say about e-mini trading that I know a lot of you watch and listen to in my YouTube videos. And today I'm going to do something a little different. I will start out, as I do every day, with today's economic calendar to see if there are going to be any announcements that are going to move the markets. Now today, Friday, January 28th, and I have Market Watch up here, and there's a whole bunch of announcements that are coming out, mostly at 8:30 pre-market, none of which are going to move the market. There was a news report yesterday of gross domestic product coming in way above what the previous number was and what the estimate was. And the news was all over this number. Everyone's terrific. Everything's great, right? In my news, it just filled up the screen. Gross domestic product came in way above estimates. And yet the market went down. Gee, why is that? What would you think? Well, what was also in the news, but not covered nearly as much, was this number here, durable goods orders. And that came out at the same time as the gross domestic product announcement at 8:30. And look at this. The previous number was 3.2%. The estimate was down a little over half a percent. But look what the number came in at, minus 9%, a big drop. And this is a future indicator, durable goods orders, okay? So yesterday, I know I got a lot of emails that asked me, Marv, the news was great. Why did the market go down? This is the reason, okay? And I'm going to skip my morning news website, and I look at CNBC. I am going to do something a little different today, and that is to recommend a book. I have no financial interest in this book. But if you want to be a better trader, get this book. All I really need to know, I learned in kindergarten by Robert Fulghum, and you can get it on Amazon in hardcover paperback. I don't know if there's a Kindle version. It doesn't look like there is. But nevertheless, get this book. And why am I recommending All I Read to Know I Learned in Kindergarten? Because most of trading is gut feeling. Gut feeling. And let me explain it very simply. You know the difference between right and wrong, right? When it comes to a number of factors that you subconsciously or even consciously weigh throughout your daily activities, you know the right thing to do, you know the wrong thing to do. But when it comes to trading, it all goes out the window. You don't know what to do. Listen to your gut, because you already know what to do. Most of trading, you already know. And the reason that I don't charge thousands of dollars for my e-mini trading course is that you already know how to trade. There's a lot that I can teach you, but get this book. It's going to cost you all of $20 in the hardcover edition, and it'll wake up the instincts in you, okay? Get that book. I'm going to go over to my trading chart, and this was yesterday, Thursday, January 27th. And of course, the gross domestic product number came out. Wonderful, came out right about over here, and look what happened. The market trended up from there, and the market opened up, and then of course it dropped down 18 points. So if you jumped on, for those of you who jumped on because this news at 8:30 was so terrific, well, guess what? You were 18 points underwater within 5 minutes. So that would shake a lot of people out. And then the market went up, down, up. Is there any way to know where this market is going? You could jump on, you could take a guess. Sure, you could guess right, you can guess wrong. But why guess? All you really need to know, you already know. Look what happened here. At 10 o'clock, the market reached a high over here at 44.15. Then at 10:15, went up to about 44.22, 44.20. Okay, so sitting there, don't know where the market's going, then a big drop down to at 1040 with the matching stochastic being oversold, okay, and a hammer at the bottom, this would be a good indication to take a trade to the long side, right? Okay, so that's one thing that your gut would tell you, right? I mean, basic candlestick reading, and I only use candlestick patterns, momentum, and stochastics. I don't cloud up my decision making with a bunch of indicators. The market did rise from there, and when the market was overbought, you jump out. Is it going to go up? Is it going to go down? Don't know. All I know is this candle indicated a reversal, confirmed by the stochastics and the following candle. Jump on, make about 20 points profit. Nice, okay? Get off when the stochastic says overbought, okay? But here's the lesson that I want to point out. There's a top here. There's a top here. There's a top here. Now, by 11 o'clock, right over here, this is what we know. We know there was a top here. We know it was exceeded. And then we know the following top didn't pierce the previous high. And then if you sit around and you wait a little bit, you see this empirical evidence. And then the market went down. And then the market came up to another high. And just look what happened. We have a line. We could draw a line here. But we have three highs, all lower highs. Okay, lower highs. So by 11:30, it would be a pretty good gut feeling that the market was not going to go up further, especially with the stochastics being overbought. So take a trade to the short side. It was a good feeling, right? It was a gut feeling. And gee, you know what? Right up here at this level, if you're really, really forcing yourself to take a trade, gee, I don't know, it could go up, it could go down. Take a trade here, and if it goes up beyond this point, because we're not off by much, then you could close your position and your loss would be minimal. But it was a pretty good bet that the price was going to decline from here. Gut feeling. So that's my lesson for the day. Listen to your gut. You want to be a better trader? Listen to your gut. You already know most of what you need to know to trade. I'll teach you the rest. And by the way, you ought to subscribe to my daily trading zone report, telling you where the most likely support and resistance is, so that you can set up your chart every day, just like I do. Sign up for this subscription. It's a monthly subscription. It's really cheap, and it'll give you a lot of knowledge. Thanks for watching. This is Marv Eisen from Timeless Dollar, and I'll see you in my next video.